G'day guys. In this video we are going to compare the second largest LIC in ASX, ARGO Investment, with the ticker code ARG, and the company that has been referred as the best dividend stock in ASX called Washington Sol Pattinson with the ticker code SOL. Make sure you watch till the end because you may learn the secret of Washington Sol Pattinson, of how they become the best dividend stock by many analysts' opinion. The way we're gonna do the 10-year comparison is that what if 10 years ago, around November 2011, we bought $10,000 worth of shares of Sol Pattinson. In this case, it was priced at $14 a share, and we spent $10,000 with ARGO Investment, and at that time, I think it's about $5.08 per share. And we're gonna use that buy-in price to calculate our dividend yield over the 10-year period and also the unit price growth. So, long story short, over the 10-year period, the share price of SolPat has grown from $14 to $30.55, which is about 8.7% share price growth per year on average. On the 10-year average distribution yield or dividend yield is about 3.7% over the 10-year period if you purchase SolPat at $14. And the franking level is 100%, similar to ARGO LIC. The average total expense is 18% for Washington Sol Pattinson because it's a holding company that owns diversified type of business. Some of them, they have a controlling interest, and also they own private companies as well. And if we compare the unit price growth for ARGO, it's lower than Sol Pattinson the past 10 years by 6.5% per year on average over a 10-year period, despite Washington Sol Pattinson being referred to as the best dividend stock that has been giving steady, consistent, and increasing dividend over a 10-year period. ARGO is outperforming Washington Sol Pattinson in the average dividend yield. I'm creating this video because I'm seeing people losing money investing with Washington Sol Pattinson because of they believe in buying great companies that give consistent dividend will yield good dividend yield. And that comes down to the first principle of this channel. Don't lose money. And how do we not lose money? Is by learning the business. Try to understand how do they make money, how's the debt situation. Here is the secret sauce. If we list out all the dividend being paid to the ordinary shares, say in 2021 they paid 146 million to the ordinary shares, and we add them up for the past 10 years, it's about 1.2 billion over a 10-year period. And that is about 42% of the profit after tax in total. So over 10-year period, Washington Sol Pattinson has reported a profit after tax in total of about $2.9 billion. So out of that $2.9 billion, 42% is being paid to the shareholders. And hence, that's the secret of how they can keep increasing the dividend, because their profit is a lot. But we need to make sure that those profit are from the continuing operation of the business, not some of the asset sale or the discontinued operation. If you see the profit after tax in 2020, there's a big spike, about 870 million, and that is because they are selling their asset. And from 2017 to 2019, they have a profit after tax about 300 million. And 300 million profit after tax, if we convert that into earning per shares, we get the EPS or the earning per shares here. As of 2021, they reported earning per share about $1.32, which is less than the previous 4 years. And what is interesting is that in 2017, they reported a similar earning per share of $1.40, and the market value SolPat at $16. Now the market value SolPat at $32, double the price, which means the PE has gone up from 12 to 24. No wonder the dividend yield has gone down by half. What I'm saying is people start following others' recommendations, journalists or media recommendations of, oh, Washington SolPat is an amazing dividend stock, but they forget that there are only certain amount of dividend that Washington SolPat will distribute to the shareholders. And there are people that bought SolPat shares at $39, And at $39, if the dividend shares is increased from 60 cents to 62 cents, hypothetically on financial year 2022, you get a dividend yield of 1.6%. And that is really bad because we are on the raging inflation. 1.6% means nothing. So remember, do not lose money, study the business. I hope you find this useful, and thank you.